It's happened again, this time in a different country, in a different set of circumstances, but the outcome is the same. One set of people losing their minds and saying that property in this form is finished forever, and the others quietly continuing. Water off a duck's back. This time, it's happened in Thailand. There's been changes to, or I should say crackdowns to certain existing rules and regulations. And before I go any further, just a caveat, I actually own property in Thailand, so I'm having first-hand experience of this, and I have clients as well that are experiencing the same as well. So this isn't just theoretical, it is first-hand experience of what is happening. A quick explainer for those of you that haven't come across this then. What is the Thai nominee structure? Basically under Thai law, a foreigner cannot own land or landed property in Thailand. So for years, the workaround has been to use a nominee structure. That's basically where you set up a Thai company, you own the asset through the company, much like you do in the UK where you set up a company to own property for tax benefits. You do it that way, and then you have Thai owners as 51% ownership or majority ownership so that it is Thai owned. This works then because technically it's 51% Thai owned, but in reality, because of the nominee structure, they're not real owners. The foreigner owns and controls the property or the land. And for years and years and years, this has worked. It's been the go-to method, not necessarily because it was legal, but because no one was really paying close attention to it. But with the rise in popularity of buying in Thailand as a quality investment location on its own, this has now changed. In January 2026, Thailand's Department of Business Development started requiring documentary proof of source of funds for every newly incorporated Thai company to own land. Then from April, those checks amended to changes as well. So changes in directors, changes in shareholdings, transfer capital, share capital, capital increase, these sorts of things. Now, why is that important? Because it highlights that the nominee Thai owners do not actually have any capital or funds in the property. So therefore they are just nominees, not real owners. Then in late April, the Department of Business Development and the Land Department agreed into a data sharing agreement in real time. So these are two databases that never really spoke to each other. They are now speaking to each other, meaning that a company's shareholding pattern automatically gets cross-referenced against land title registries. If it gets flagged, it then gets referred for investigation without anyone filing a complaint or having to dig deeper. So a lot of this stuff that was going on under the surface has now come to the surface with these two things talking to each other. For those of you interested, the system behind it is IBAS. It's AI driven. It's been working since late 2025 and it doesn't need a tip off or human input. It finds these patterns and flags them itself. The numbers so far then, what does it mean? Who's been impacted? 46,000 companies have been flagged, 852 owners of those companies, shareholders, have been prosecuted, and 15.1 billion in Thai baht identified as damages. And in March, a targeted investigation identified a Thai nominee in Pattaya that was acting as a shareholder, majority shareholder, on over 100 different companies. The result of that has been law firms closing down, people losing licenses. So it is quite serious. So why does this matter now, and what are the lessons that can be learned if you're thinking about buying in Thailand? But again, the lessons that can be learned and applied to portfolio building across the world, wherever you're looking at buying property. It's quite a common theme we've seen here on this channel recently. You've got changes to negative gearing in Australia. People have been losing their minds, saying it's over. In the UK, we saw it with Myris. Here, we're seeing it with the changes to the nominee structure. Is it a massive cause for concern? No, not really. It just means you need to plan better. But here's what you need to consider. If you're owning Thai property in this way, and there's another way that is above board, fine, fully legal, no problems, we'll discuss that later. If you're owning property in this way, the penalty for, up until now has been enforced sale. So you have to sell the asset, maybe quickly. You might lose a bit of money if it's a fire sale. If not, you get full price and you can recoup your money or your capital invested. Now, coming in is a proposed land code amendment that is in the cabinet to be discussed, I guess, if that's how it works, that would change that from sale to asset forfeit, i.e. the asset's taken off you, you lose it and you don't get any money from any sale. So what we're seeing here is not a warning shot, a shot across the bows. It is full enforcement of these rules. What to do then if you own property via the nominee structure, and what are some of the other ways you can own property legally in Thailand? If you own property this way, then there's two things you shouldn't do that is panic selling and then or assuming that you'll be fine and it won't impact you. So doing nothing or panic selling, extremes, as usual, surprise, surprise, in any market, the extreme behavior is probably not the best approach to take. The right response would be to get some proper legal advice from a proper independent Thai legal firm now to see what your exposure is, if any, and what you can do to change it. Because the window to voluntarily transfer to a compliant structure is still open. So if you can be seen, as in most instances, you're seen to be complying and working within that and with the powers that be, then you can still have a chance to do that. If you are looking at owning property in Thailand, something you've been thinking about, then what I've done, what a lot of people I know buying in Thailand are doing is buying condos where you can buy freehold or leasehold. How that works, it's effectively the same ruling. If you've got a condo of 100 units, 49% or 49 if there's 100 units can be freehold that you can legally own as a foreigner, and you will have the contracts, the land registry, all of that will say freehold in your own name, as it is in these contracts here for my property. And then within that development, 51% of them or 51 need to be leasehold. What does that mean? It means that the majority is still Thai owned, the land is still Thai owned, and the majority of the building is still Thai owned, so it is compliant. And there are no changes on the horizon with this because it is not at all murky, it is all fully above board and as the Thai government wants it to be. Is the dream of owning a retirement or income generating property in Thailand dead then? No, not at all. Just like major changes to regulation or rules in any other market, it means you need to adapt and change your strategy slightly. If you haven't bought yet, then that would be using the correct nominee structure or looking at buying a freehold condo if you'd like to buy freehold, or a leasehold condo. Those are ways you can own Thai property with no issues at all. If you own via the nominee structure and you're unsure whether you're compliant, get some Thai legal advice and find out if you are or not. This is not unusual to see as markets develop and progress and more developing locations become developed locations, such as we're seeing throughout Asia. Rule changes and regulation changes will happen. Doesn't mean it's a bad market, it just means change your strategy accordingly. If you're thinking about buying property in Thailand, or you have property in Thailand and would like to have a chat on it, hit the link below and I'll send you a copy of my newsletter that breaks this down in a bit more detail. Then you can also email me direct if you've got any other questions. We can have more of a chat on property in Thailand, how it fits into a larger portfolio and buying in a compliant way.